What's going on? Blake here, Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This video is going to help you get prepared for this trading week and give you some insights into how I am approaching and reading this tape. If you like it, make sure you hit that like and subscribe and check the links in the description. So let's go ahead and get into it. We have the S&P SPY pulled up here on a daily time frame. And guys, we are in a 12-day downtrend. And, for the most part, we've just been sitting and waiting, avoiding all of this nasty trading, waiting for higher odds, waiting for price to get back above the 10 SMA, back inside the cloud before we can get swing long. And right now, that's not going to happen tomorrow unless we just get a huge monster candle, right? So, still have patience. This week is still going to require a lot of patience. And I've been preaching it all week. Patience, patience, patience. You don't have to trade every day. If you are taking trades from the trading playbook, it's for super aggressive traders only. So I'm only providing those trades on the playbook if you're super aggressive and you want to try to trade this market, which I'm highly advising against, which is why, one or two of the days last week, there weren't any setups on the trading playbook because, in my opinion, most traders should be sitting on the sidelines waiting for odds back in their favor. Because if you are trying to trade this market, you have to understand that you're trading against the brightest minds. This is the most difficult game that's ever been created, and you're against tons of liquidity and capital and funds, and you already are at a disadvantage being a retail trader and investor. So trying to trade a downtrend, and especially the type of downtrend that we've been in, when we have the 200-day moving average that we're breaking below, right? So you can see we're breaking below this 200-day moving average. We haven't done that since the pandemic lows. So since the pandemic, that was back in 2020, right? So we haven't broken below this 200-day moving average in quite some time. So it's really difficult to get long and be bullish when we're starting to break below key support levels. But on top of that, it's really difficult to try to short and press short at these levels, because these are the levels that if we do get a bounce, this is the ideal area for value investors to try to buy the dip, quote unquote. So we're pretty much in a place it's difficult to go long, and it's also difficult to go short, because if we do, bounce, which I think, there's a high probability that we get, some volatility this week where we head, towards the upside before maybe rolling back over. Once again, I'm not predicting, but, right now this price action is extremely bearish. So, like I said, it's difficult to get long until we can get back inside the cloud. Which right now on the S&P SPY is right around 460, and we closed at 437. So it's going to require some patience, right? Now, obviously, this is going to come down further and start sloping down. But on the flip side, you can't short anything because, obviously that's not our system. We like to trade the uptrends, and we make money in the uptrends because, the market tends to go up. It's difficult right now. We're seeing a little bit of volatility, but putting the odds in our favor, only trading the long sides of the trades, making sure that we're on uptrend, making sure that we have momentum, right? These are all things that we look for. We look for momentum, we look for trend, and we look for price action. And right now we have none of those three things in our corner if we're trying to go long. Momentum's to the downside, trend is to the downside, and price action is definitely to the downside. So, I don't mean to sound, extremely bearish, because I still think, we could easily, maybe just chop around, and I don't think we necessarily have to, crash and roll completely over. But I also think that, it's difficult to get long in this type of market until we can obviously have our rules to trade. So I know everybody wants to buy as cheap as they can. They want to buy this dip. They want to buy the lows. They want to pick the bottom. That's never worked out well in my experience. What does work out really well is our rules to trade and putting odds in our favor and waiting for price back inside the cloud. So that's exactly what I'm going to do. It's served me well for the past 12 years. And I'm not going to deviate because that's what's made me consistently profitable year in and year out, is having the patience and the discipline. I talk about it all the time. You have to have patience to be successful at trading, and you have to have discipline as well. So right now, this week, it's going to be really boring for me again. For swing trading, if you're super aggressive, you can take the 5-minute RT day trades if that's, if you need to fill that need to trade. But if you're feeling that way, it's probably not a good thing, and you probably shouldn't be trading. So have patience, wait for higher odds, wait for momentum, wait for trend, and wait for this market to kind of settle down a little bit, right? This is really difficult, especially for retail traders and investors. What are bonds telling us? So bonds, still really doing nothing. Don't really love a trade here. What about gold? Gold could be something that we take a look at this week. Actually, we have this macro wedge pattern. I hate wedge patterns. I don't like to trade wedge patterns because a lot of the times these will just kind of chop around and, bounce between these two areas until it finally wants to break out. And then once you do get a breakout, it's a false breakout oftentimes, and it'll roll right back inside the wedge. So I don't love these wedge patterns. But if you look at the weekly time frame on gold, it is definitely firming up. So you can see, we're back above the cloud, and we have, multiple weeks closing above the cloud. And then also if we look at some volume by price indicators, you can see this huge volume shelf that we've held between the 168 to 166 area. So this is a massive volume shelf that we're sitting on top of, and we're starting to get this curling back up, and we're starting to get some trend, and we're starting to get some momentum. So gold is definitely something that I have my eyes on. And obviously, it's going to be a place that we're going to be looking to put some capital, especially if tech continues this slide lower. Tech just looks absolutely horrible. Not to get extremely bearish. We're at a 10% correction, right? So these are natural and normal within bull markets, but just not the best trading environment right now. I'm gonna go ahead and take this volume indicator off. And then lastly, as always, we'll talk about crypto. So Bitcoin, I posted a chart on Twitter this past week. I had mentioned that I'll be looking to get long above Bitcoin if we can get back above this area. We never got there. And so obviously I never got long, and that's why it's important to have your levels defined and risk defined for trading. So we were looking to get long above this level, never happened. This was our stop, broke below this level, and then dumped. So once again, nothing has really changed. Can't really get, too bullish Bitcoin until it gets back above the top of this cloud, back above the 50-day moving average. It's pretty simple. Ethereum, very similar story. So, can't get back above, back into Ethereum, can't get bullish until it's back above the cloud as well. So, these are always questions that I get. Should I sell? Should I buy? Should I move some to stable coins? What should I do? And, it's very difficult for me to answer those personal questions because, number one, I'm not a fiduciary, and not anymore anyways. But it really depends on, what your, goals are as an investor. Are you buying something to hold for the next 5 years? Are you buying something to hold for the next 5 days, right? So it's always important to keep that perspective. And, when you start seeing, Ethereum down as much as it is now, almost, really almost 50% from the highs. So 48 to, 20, down 50% from the highs. When you start seeing these 50% pullbacks, and now you're asking yourself, should I move some of my crypto into a stable coin? Well, now is not the time to do it, in my opinion, if you've been a long-term investor, because, the time to do it was back here when it was breaking trend, right around the 42, 4,000 area, not when it's down here at 25, or not when it's already corrected 50%. So at this stage in the game, once again, similar to shorting the market, we're really oversold. It could easily bounce. And it's just difficult to roll out of this when it's already came down 50%, right? But it's also still really difficult to be really bullish Ethereum and crypto and Bitcoin, because we're in a bear market right now. So until we get back above, once the price action is back above the cloud, my tune will change and I'll, start adding new risk exposure to crypto. So until then, just wait. Similar to like what we're doing with the market, right? So the S&P, just to wrap up, it doesn't look great, guys. We're in an extended downtrend. We're, roughly down 10% from the highs. And like I said, these are normal pullbacks within, larger macro uptrends. So what I mean by that, if you look at the monthly time frame, still a huge macro uptrend, right? So yeah, last month absolutely was a nasty, horrible candle, bearish engulfing candle. But we just closed right at basically the 10th month moving average. And who knows, maybe this is what was needed before, we ripped to new highs. Or maybe this is the start of something that's much, much bigger. And if it is, we're going to be prepared for it. We'll move out of the S&P and move into other sectors. And maybe if, it gets really bad, we'll even take, inverse positions on the NASDAQ or the S&P. So, don't worry about it. We're going to be prepared regardless. If the market crashes, we're going to be positioned well for it. We might even make money on the way down. So I'm not too concerned with this market. Very confident that we'll be able to navigate this just based on price action alone. So just to wrap up, have patience this week. We need to have odds in our trade on our favor before we get into trades. We don't have that. And yeah, just take it easy, guys. You don't need to trade every day. This is still the first month of the year. If you haven't gotten paid yet, that's fine. You're going to get your uptrends. Last year, we saw 11 uptrends. All 11 of them paid, some more than others. And it's going to be no different this year. We're going to get our uptrends. You just have to be patient and wait for the signals. With that, I'll see you guys in the open.